What's up everyone? Today we're going to talk about what they don't teach you in school. How to invest your money. You're not going to want to miss this one, so stay tuned. Okay, so I know one thing is for sure. I definitely was not thinking about investing when I was in high school. But this lesson is the same if you're 18 or 80 years old. It's about investing and how anybody can invest even if you don't have all the information in the world or you don't have all the time in the world to track your investments. So today we're going to talk about how to invest very easily into some stocks and very easily into some real estate without having to stop doing what you're currently doing. Now, I know you've heard this before, but the sooner or the earlier you start investing in your future, the more money you're going to end up with. But not only that, the less amount of money you actually have to use to invest on a monthly basis. So let's look at that example for just one moment. Let's just say you're 18 years old and you've got the next 47 years, which would leave you at the age of 65, in which a lot of people are thinking about retirement, let's be honest. Took $100 a month, just $100. Where would that leave you at the age of 65? Well, let's take a quick look at that. So investing that much money would actually leave you at $56,500 as your contribution. But just take a guess at how much money your investment would be actually worth if we only used an 8% annual compounding interest rate. Well, that number is actually going to be ridiculously high. Check this out. If you give it enough time, your value is going to be $547,203. Call it $550,000. Now that is almost a 1,000% return. It's actually 976% that you'll be receiving on your money with only an 8% interest rate on a yearly basis. And that's only you investing $100 per month. Now, I know what you're thinking. You can invest a lot more than $100 a month, but you may not be 18 years old anymore. And let's just say that you're 45 years old and you want to invest $1,000 a month for the next 20 years until you're 65 years old. And then you want to think about a retirement. What you would have as a value at an 8% compounded interest rate would be $552,000, just as much as the youngster who was 18 years old, only investing $100 per month for 47 years had, but they only had to invest $56,000 in order to get that same amount. You, on the other hand, would have had to invest $241,000 to get to the same place that the 18-year-old had to. So let's look at it from a different perspective. Let's think about it if you didn't invest this money and all you did was just save that money. What would that do for you? Well, a lot of people are still in that school of thought that saving is better than investing. Well, that's not actually the case. So let's look at that example for 1 second. If you're 18 years old and you start just saving $100 today in a piggy bank for the next 47 years, your money would only be worth $11,600 in 47 years' time. But if you just invested in something very safe, your money can actually go up almost 1,000% from what it is today. So that's really just something to think about. But now let's talk about what kind of investments we can make. And if you're watching this and you're a beginner, these are the most simple investments anyone can make. And if you're young, you probably grasp this even quicker because these things are very simple to do and they've been historically very safe as well. So let's get started with stocks first. All right, so the first investment vehicle I want to talk to you about is investing in index funds. There's a bunch of different companies that have them. Some of the most popular ones are Vanguard, Schwab, and Fidelity. They have some really good ones. And what they do is they basically track the movement of the S&P 500. Those are some of the most valuable companies in the entire world. So no matter what the companies do as a whole, these index funds track it and they go up in value along with it. So historically over time, those index funds have returned anywhere between 7 to 10%. So that is a very popular way and a very safe way to you to ensure that your money is going to be doing something rather than nothing at all. And if you're very risk adverse, then this is a good way for you to make sure that you're not getting eaten alive with fees because they're not managed actively. And this is a really good way for you to set it and forget it. You don't have to worry if your money's up or down because you know eventually over time it's going to go up in value like it has over the many decades that the stock market has been tracking these types of indexes. So that is a good way for you to get started. Next, I want to talk to you about exchange traded funds or ETFs. So this I'm going to break down for you very simply. What it is basically a basket. it could be a basket of stocks, it could be a basket of commodities such as gold or silver. It just tracks the different types of investments. Why this is good is because it spreads your risk over many different companies. One of the most popular ones is the Spider S&P 500, which actually does just that and tracks the movement of the S&P 500, similar to what I just explained to you with the index funds. Now, I know this is a lot for you guys to remember, but I'm going to leave a list of all the companies that offer exchange traded funds and index funds down below, so don't hesitate to check those out. Next, I want to talk to you about actively managed accounts. So actively managed accounts, you have to be very careful for, because some of the fees and some of the brokerage charges can really eat you alive. But there is one actively managed fund that I'm a big fan of, and not only that, but I also invested in them. This fund is called ARK Invest funds, and they have a lot of different funds depending on what you want to invest in. So for instance, let me just give you an example. They have an innovation fund, an autonomous fund. They have next generation internet, which is all the rage right now with 5G going around. We have the human genome fund, and we also have fintech or financial tech. So these are all places that you may want to invest money in, but you really don't know which companies to pick or how to get started. So what they do is they go out there and they just invest in a lot of different companies when they're either in the early stages or maybe on their way up to becoming very big companies. That way you can have maximum returns. Now, I know what you're thinking, this sounds a little risky, but they spread their risk over many different companies, and the analysts that they have working with them are some of the world's best. So they analyze these stocks so we don't have to. That's why we have to pay a small management fee. Now, one of their most popular funds is the ARK fund, which has returned about 150% return this year. And I don't know about you, but I like the sound of 150% return. Now, just remember, it's not going to always be 150% return every year, but some of the companies that they've invested in this year have had outstanding results and outstanding breakout years. Now, even if it's less than that or cut in half or a third, I mean, that's still great, guys. I don't know too many funds out there that are bringing those kinds of returns for their clients. So now I'm going to give you the blueprint to how to break into real estate. So this is what you're going to need to do. Have a lot of discipline, save your money, and get yourself a steady job. Once you have those two things, you can buy your first investment property, which is not technically going to be an investment property, with just 3.5% down. You want to buy a 4-unit first, because you can buy up to a 4-unit with only 3.5% down payment. You're going to live in that house for a few years, and then you're going to upgrade to maybe a 3-unit, and then once again, after a few years, upgrade to a 2-unit, and then eventually you could buy yourself your single family home. And guess what? With every single one of these properties, you're going to be able to do it with a very minimal down payment. The best part of it is that you only need to come up with a down payment for the first house, because when it's time for you to buy your second house, you can refinance the first one, pull some money out, use that as a down payment for the second one. Same thing with the second one, refinance it, pull money out, do the same thing with the third house, and hopefully by the fourth house, you've got a humongous down payment, or you might even be able to buy that house cash. Now, the next way to invest in real estate is very simple. What you're going to want to do is look into what are called REITs, or real estate investment trusts. A very popular one that I'm invested in is called STORE. Now, STORE is a company that specializes in buying single-family homes, renovating them, and then renting them out. Now, this REIT is actually so popular that even Warren Buffett himself has taken money and invested into this through his Berkshire Hathaway company. Now, if it's good enough for Warren Buffett, I think it's good enough for me. Remember, there's always going to be a demand for real estate, especially for rentals. And the market that we're going into right now, we could see a lot of people displaced. And if that's the case, they're going to need somewhere to go and live. Single family rentals usually get rented out very quickly. I know that's been an experience I've always had. So this REIT could have some major upside. The next way for you to invest in real estate without getting your hands dirty is by purchasing the stock in either Zillow, Redfin, or Opendoor. These three companies actually have a model in which they buy, fix, and flip properties. But currently, none of these companies are even profitable, so you want to be very careful with them. They do plan on being profitable in the future, but their stock value has jumped tremendously with this new model that a lot of people seem to think is the way of the future. So that's a good way for you to maybe get your foot in the door. Now remember, when you're investing into a single company, you have to be very careful. It's probably much smarter to invest in different companies who do the same thing, such as the three I just mentioned. Now, there's another way you can also get involved in real estate, and that's investing into the home builders such as Pulte, Toll Brothers, or DR Horton. What I like about these three companies is that they all survived the 2008 housing crash. So it means that they know how to maneuver themselves when it's a down market. So it may be a good play for you if you think that real estate has a good future, especially for you as an individual investor. You may want to take a look at these three companies. And now lastly, I'm going to tell you the last play in real estate that I think anyone can get involved in with very little money, and that's investing in the Home Depot. The reason why is because the Home Depot is always going to do well when real estate is doing well. And even when real estate is not doing well, people are always going to Home Depot to buy stuff for their own house, to fix around, especially during the pandemic. A lot of people were stuck in the house, so what better things to do is just go and tackle some of the things you've been putting off, such as maybe fixing your closets or fixing that leaky sink. Okay, so I just gave you two different avenues on how to invest for your future, either through the market or through real estate. And I know neither of them are very, very sexy, but the problem is that a lot of people are out there flossing on social media. So a lot of people, especially the younger ones, they think that they have to show off now, and that couldn't be further from the truth. The best thing for you to do is actually be disciplined, live within your means, and just save your money long enough to where you can invest it. And then the more you invest, you start to see your money grow, and it becomes almost like an addiction, but in a good way. And you start to see all this wealth that you start to accumulate, and before you know it, given a few decades down the road, you can live the life that most people only dream of living, and it's not going to break your bank because you're only living off the dividends or you're living off the interest payments off of your investments. Now, I don't know about you, but that sure is sexy. Damn, that's sexy. Now, the last piece of advice I'm going to give you is that with investing, it's very difficult to A, either be disciplined for it, or B, remember to invest. So the best way to do it is by creating a way for the money to be automatically withdrawn out of your account and then dispersed into a different account where it's going to be for nothing else in savings, or where it can be automatically invested for you in any kind of basket of investments that you want. Now, a really popular way of doing that is either by using an app called Acorns, which will allow you to either save money or invest money automatically every time you spend money, or you can just have your bank withdraw the money automatically into another account. Either way, the best way for you to do it is to have it automatically done. Some companies actually even offer 401k matching where you can do that, and then once you have enough money in that 401k, you can roll it over to an IRA, self-directed, and then invest in something that you think is much better than what your 401k provider is giving you. Those are just some ways for you to get your financial house in order. I know it's not the most exciting stuff in the world, but believe me, it's very necessary. And that's why they don't teach you this in high school, because there's a conspiracy. They don't want us to get ahead. They want us to stay broke. As a matter of fact, almost half of the people in this country don't do any kind of investing whatsoever, which is a very sad thing. I think it should be mandatory that people learn about investing, learn about money, and learn about your finances. Learn about anything that's going to help you in life. I recently did a video on real estate, and I also did a video on the EV stocks that you can invest in, and you can see both of those right here.